Good morning, good afternoon, good evening, traders from across the world. My name is Trader Alan, and I'm going to take a minute to show you how I trade a news release. So what we had here this morning was the euro-dollar at unemployment data release, and what we're going to do is we're only going to trade in the direction of our news spike. So we're going to wait for the news to be released. We're going to let that initial reaction work itself out. In this case, we popped up to about 36.50. The market then started to pull back. At that point, we've taken our fib tool and we draw our fib tool up here from our high of our spike, and our starting point is our low that we had before the news release. So here's our low before the news release. This is just a reaction here of antsy traders trying to get in ahead of time, thinking they know what they're doing. We want to go with what our low was, which in this case was right in here. This was our pre-news release right at this point. So now that we have our fib tool, we wait until the market pulls back to a 50% level. In this case, the 50% level was right here at 36.17. Once the market pulls back to this level, we wait and we want to trade in the direction of our news spike. So we wait until the market is pulled back to the 50% and then has started back up again. So our actual entry that we're going to have will come in once we come back up. We start trading back higher again. We want to enter at our 38.2 level, and that's just so that our entry pattern is the same and we can track it. If we just enter all over the place, you can't track how well your performance is. So we're going to enter at this level here, which is 36.24. So that's our 38% level on our spike. And our exit is 23%. So in this case, the market traded all the way up, and it came up just short of the 23%. Once we start seeing weakness in this area at 23%, then we go ahead and close out our position. Now, this is just strictly a reactionary trade. A lot of it is done just by feel because the market moves so quickly. And you want to buy on your strength and you want to sell on weakness. So as soon as we get this weakness in this area of our 23%, that's where we want to exit. So I hope you got a good understanding of trading news spikes. They can be quite profitable. They can also be risky. Our stop loss is always going to be the zero line. So you have to be willing to risk. In this case, our risk would have been down here at 35.83. So you have to be able to calculate these in your head really quickly. You don't have time to calculate, oh, what's my stop going to be, 10 pips, 20 pips. You have to be willing to take that risk. So you have to be able to glance at the chart and say, okay, yeah, I'm really willing to accept that much risk and for the reward you're going to get. Thank you. If you have any questions or comments, please feel free to leave them here, or you can go to my blog, Wall Street, the number 2, Easy Street, at .blogspot.com. Wall Street 2 Easy Street .blogspot.com.